All right, we are live. So they said this would never happen in the crypto space, that Bitcoin would never fall below its previous cycle's all-time high, but it happened. Over the weekend, we saw Bitcoin drop down to $17,500, which is below the prior cycle's all-time high of about $20,000. We talked about this on the channel on Friday. We were speculating whether Bitcoin could fall below $20,000, whether Ether could fall below $1,000 respectively, and it both happened. So we're talking about that in this video, what that means, and what we should expect coming next. Look at a lot of other things that have happened in this space since our live stream on Friday. Again, we do these live streams Monday through Friday, this channel. Just subscribe, turn on notifications. You're going to find out about those whenever we go live. So if you're new around here, hey, I'm Gregory, and on this channel, I turn you into a blockchain master. So if that's something you're interested in, then smash that like button down below for the YouTube algorithm and subscribe to this channel. And if you want to have master blockchain step-by-step start to finish, then head on over to dappuniversity.com/bootcamp to get started today. So we got people jumping in the chat here. We got Technically, CodeChap, Above Realty, Dave, Robert, Automatic Beats, Jaya, I hope I'm saying that right, Adam, Venture Warrior, Landon, I'll see Boro, Monty, Brent, Cryptechology. All right, so let's jump into this. So Bitcoin has fallen below its prior cycle's all-time high of $20,000. Okay, Ether fell below $1,000 down into triple digits, about $875. These are levels that a lot of people thought that crypto would never, ever go to, okay? It's got a lot of people wondering, is crypto dead? Is Bitcoin dead? What's going to happen over the next several months? In fact, right now, we have the search term, is crypto dead, at the all-time high on a 5-year time frame. If you look at things like, is Bitcoin dead? We're back at an all-time high on a 5-year time frame. So, this got a lot of people worried. So let's kind of break down and look at, potentially why this happened and what we could think might happen next. All right. So the first thing is, let's talk about what we talked about on our live stream on Friday, which is basically we were sitting around the $20,000 level, $1,000 level. And we speculated on some reasons why crypto might fall below those levels, despite most people thinking that it can't happen and that we didn't want it to happen. So we've seen a lot of really bad things happen in the crypto space over the past 6 months. Of course, what the price action we've seen, the downward trajectory from our November peak has not been a crypto-specific problem, right? We've seen it in stocks. The S&P 500 is officially in a bear market. And that's not, it's not like crypto's following stocks. They're both following the same thing. They're fighting a massive headwind in the macro economy. I don't claim to be a macroeconomics expert by stretch of imagination, but it doesn't take a genius to see that inflation's a problem, that the Fed hiking interest rates has had a significant impact on all assets, all right, especially high-risk assets like growth stocks and also crypto, and also just the stock market in general, right? So that's sort of the headwind that everybody's facing. I mean, crypto has had some specific problems in and of itself, right? Crypto has basically seen Terra Luna collapse, algorithmic stablecoin that has, corresponded with a pretty big leg down in price. All right, we've seen the Celsius disaster happen. I'm going to recap all these things, but that's corresponded with the big leg down in price. We've seen massive liquidations and margin calls from big funds in the space, massive leg down, corresponding to those types of things. And we speculated that on this channel, these things could have contagion risks, all right? Whenever you have, insolvency issues, the crypto space is somewhat incestuous in that regard, that you have a lot of people who are, kind of tied together with one another with leverage and liquidity and, lending and all that type of stuff. And sometimes when those things break, people can't pay each other back, and people are forced to sell crypto assets. That's part of what forced selling is. And so when you get down to these price levels, that's kind of what we speculated, is that some of the volume that has caused crypto to fall below these price levels of $20,000 per Bitcoin, $1,000 per Ether, ETH getting back down into triple digits, that a good portion of that could have to do with forced selling. All right. Now, there's always multiple factors, all right, that determine the direction of price. A market is a market. There's always different reasons why numbers go up and down, but that is one big reason why that's one big reason that I see a lot of people explaining the recent price correction, the wicking us down below $20,000. And I think it's plausible because of everything that we've seen happen in the space. Now, let's talk about, what this means for Bitcoin, because it just did something that nobody ever thought it was going to do. Every time you look in Bitcoin's history, every time you look in Bitcoin's history, you see a new cycle. Well, this is not the entire history of Bitcoin, so I only have the Coinbase chart pulled up here. But every time you look at Bitcoin's history, every time it goes up above a prior cycle all-time high after the halving, it never falls below. And it just did. So first thing is that's going to make a lot of people lose confidence in Bitcoin. Now, I think it's going to basically make a lot of people with low conviction lose confidence in Bitcoin. It doesn't make me personally lose confidence in Bitcoin. But let's talk about sort of what that means here. First of all, is basically, I think one thing that everybody has to think about this in a couple ways. The entire game has changed with what's going on with the macroeconomic scene, which I talked about a minute ago. Basically, everybody's assumptions about, that Bitcoin always trends higher after a halving, or that Bitcoin's never going to fall below its prior cycle's all-time high, or that Ethereum's never going to fall below its prior cycle all-time high or never go to triple digits. There's so many assumptions about what's, supposed to happen in the crypto space that I think a lot of these things are kind of superstition to some degree. All right, there's the whole idea of charts and numbers and all these things, but they really fail to account for the fundamentals. Okay, it's sort of like crypto is programmed to do this thing very predictably off into the future. But if it was that easy, it would just be that easy. And if everybody knows everything, markets tend not to do the thing that everybody knows. Okay. So, with all the charts and all the, explanation about what crypto has to do based on certain rules, they failed to account, these macroeconomic factors. This is the first time that crypto has been in some type of major economic problem for a sustained period of time. Of course, we had the dump back in March of 2020, but we quickly had, stimulus bail pretty much everybody out of that, right? This is the first time we've seen crypto in a really high interest rate environment. Well, I say high interest rate. This is the first time I've seen crypto experience what it's experiencing right now. The current type of economic environment, this is a first. And so all sort of past explanations about what crypto is supposed to do are, in my opinion, just completely invalid in this environment. We've been talking about this for months on this channel, where basically, if you think that you've got a halving that's always supposed to do. I've been saying for a long time that I think that the Bitcoin halving stuff is, it's kind of superstition in the first place. I mean, I do think there's some impact of the supply side of Bitcoin, assuming the demand stays the same when the halving happens. Okay, but the fact that just predictably is what drives every 4-year cycle, it's kind of crazy in my opinion. So. That's what I would say about this, right? So if you can't trust the halving to be like this perfect thing that magically guides the crypto price every 4 years, then by the same logic, I don't think that you can look at Bitcoin falling below its prior cycle's all-time high as the death knell for throwing us off this course that Bitcoin is supposed to just perfectly track, over time. Because if that's not Bitcoin's actual destiny, then there's no way for it to break this deterministic pattern that everybody thinks is supposed to happen. So the other thing I'll say about this is, if you look at this in terms of percentage, drop, right, from the top, one way to think about crypto's potential in terms of ROI and also the risk reward from the top, like how much it can fall, how much it can drop, is not so much measuring increase, cycle high, like previous cycles high. There's a lot of people who say hey, look, Bitcoin only went basically 3x, from its prior cycles all the time. I mean, a little bit more, right? But if you think about it, that's not necessarily the best way to look at it. Part of it's looking at it off the lows, right? So if you look at what Bitcoin did off the lows, it was really more like a 20x, right? And so if you think about 20x off the lows, what does that mean for basically if it didn't go quite that high off the lows, then we're looking at something that could fall, a similar, like by a similar order of magnitude down is going to be below the prior cycle's all-time high. Okay, so part of that's just thinking about what Bitcoin can do in terms of its downside risk. If it has a relatively same amount of downside risk and it didn't go as high off the lows, then that is something that's very easy for it to fall below its prior cycle's all-time high. So that's another thing to consider, right? Is because we didn't go that high, it's a lot easier for it to fall there. So, does this mean that crypto is dead? I know it's what everybody thinks. That's what the data shows, at least. I don't think that it means crypto's dead. I think crypto did something that a lot of people did not expect, myself included. I didn't think that Bitcoin was going to fall below its prior cycle's all-time high, especially not as fast as it did. But I don't think anybody, really expected what's currently happening in the economy to happen, and to happen as fast as it did. Now, during the bull run, when we were looking at crypto, kind of trying to keep a pulse on things, cautiously try to determine the direction that it was headed. During that time, I would often bring up that, hey, this is where I think things are headed. But one, potential invalidation of all of that is something happens in the larger economy, and something did happen in the larger economy. And I still am maintaining that, what happened with the interest rate hike and the spook in the stock market, I still maintain that ended the party early, okay? I still think that we could have gotten to, the hallowed levels of $100,000 per Bitcoin, 10K per Ether, if this event had not happened, okay? So one potential optimistic outlook on that is everybody who's looking at, crypto is dead whenever, whenever the winds sort of turn in favor of growth and all that type of stuff, assuming that we get some sort of Fed pivot eventually. One optimistic outlook is that essentially that's going to be part of the narrative, which is like, hey, crypto is booming, crypto is growing, the party got cut short. Look, the recession's in the rearview mirror, inflation's in the rearview mirror. Like, we have a prosperous time ahead of us again. Let's get crypto back on track to where it was headed. All right. That's a potential part of the narrative. I don't know what it's going to be. I don't know what other tech is going to be here. I don't know if it's going to be a recycling of the same thing we just saw. But at some point, somebody's going to look at Bitcoin and say, all right, if I buy some now and it just goes back to its prior cycle's all-time high, that's a 3x and change on my money, right? I don't know how long that's going to take, but that starts to look attractive for people because historically speaking, whenever people Google, is Bitcoin dead? Is crypto dead? That has been a pretty good sign, okay, to buy some crypto. All right, look at this. Not necessarily here when it was initially crashing, right? But if you look at this, December 2018, huge spike in is Bitcoin dead? That was a good time to load up on some BTC. I'll put it that way. Now, of course, this is not financial advice. I'm not telling you that right now is a good time to buy crypto. But what I'm saying is you look at massive search volume for is Bitcoin dead? Bitcoin falling below its prior cycle all-time high, which nobody thought was going to happen. You see massive selling volume on this wick down. Lots of indication that it's forced sellers who don't really want to sell. There's a lot of signs of capitulation in all those things. There's a lot of bottom signals in all those things. Okay. Now, I'm not saying the bottom's in. That's not what I'm trying to say by any stretch of the imagination. We could pump, we could come back here, we could come back down. Okay. But there's a lot of indicators that look like a good, really long-term, really long-term, again, not financial advice, not telling you to buy any cryptocurrency, but good long-term indicator to risk reward. Somebody's going to say, hey, if I don't need this money for a long time, it's probably going to 3x from here. Somebody says never say never in crypto. Yep, that's right. Somebody said they knew it was going to fall below the all-time high. Yep. I didn't think it was going to. It did, though. As we started looking like it might, when I said didn't think it was going to, if back here, I didn't think it was going to. That's for sure. Getting here, it looked like it was getting a little bit closer to, this is a possibility, right? But we got there a lot faster than I thought we would. Someone said generational wealth transfer opportunity. Yeah, I mean, I think so over the long term, right? Now, what's a potential downside risk for Bitcoin? I mean, could we go back down to 10K levels? Could we go down further than that? I mean, if the economy gets really ugly, I'm not going to rule anything out, right? Because I was saying before, like all the assumptions people have that, Bitcoin's got to do this based on its programming, on its history, based on the halving, based on all these other superstitious models that we have cooked up over time. It's got to do this, got to do that. All that deterministic stuff is not, how's that working out? How did that help you sell the top in 2021? It didn't help anybody. So there's no rules anymore. There's no rules. Someone says I made a purchase a few months ago. Am I buying ETH down here? So I did make a purchase a few months ago. I will likely deploy a little more soon. I did not buy any over the weekend when ETH dipped below 1K. Honestly, I was not watching crypto over the weekend. I tried to unplug from crypto at least 2 days a week. Somebody says I saw on Twitter the Bitcoin halving will not happen this time. Fake news, right? Now, the Bitcoin halving is going to happen. We just don't know how much of an impact it really has on the price of Bitcoin. Yeah, Bitcoin halving always happens predictably on a 4-year schedule. I want to be clear about that. So what does that mean? Basically what that means is, whenever you run the Bitcoin network, it's got nodes that are miners, okay? And those miners basically are the ones responsible for running the network. And they create, well, they don't create. The blockchain creates Bitcoin essentially and pays the miners. It's called a block subsidy, okay? So the amount of Bitcoin that's paid to miners every single block when new blocks are produced, whenever new cryptocurrency is mined, that gets cut in half every 4 years. So that means there's less Bitcoin hitting the marketplace on a per block basis every 4 years. Now, everybody says that predictably causes Bitcoin price to go up because of supply shock, but the demand has to continue to increase in order for that to happen. It's the same time thing with ETH, right? So ETH is about to undergo the triple halving. We're basically, we're on proof of work. We're moving to proof of stake. And whenever we go to proof of stake on Ethereum, then basically, the block rewards are going to get cut in half 3 times, hence the triple halving. So basically, ETH's going to go from 4% inflationary basically down to like 2%, down to 1% to 0.5%. It gets cut in half three times. So basically, that, I've been saying the same thing, like, that can have that can have a positive impact on the price of Ether. The fact that there's less ETH in the marketplace than there was before, and it's actually shrinking the supply. So here's the other thing, like the Bitcoin halving, assuming that the demand increases, it will have an impact on the price of Bitcoin. Okay. Same thing with the ETH triple halving. Assuming that the demand increases or stays the same, it's going to have an impact on the price. Now, if people only want to sell crypto and we continue to experience like these just down only mode that we've been in, like it's not going to do anything to the price. So it's one of those things where the bull markets themselves can become more explosive, but some of that gets a little bit offset with the actual market caps of the cryptos themselves. And that's one thing people don't like to really take into account that much. As Bitcoin's market cap gets bigger and bigger, the halvings honestly have less and less of an impact. So I'm just kind of talk about the recent meltdown of Solana on Solana. So I can't talk about it because I don't know anything about it yet. I saw stuff floating around the news this morning. I haven't actually done any real due diligence to understand what took place. Somebody says, I used to think that the double peak of last year was proof 4-year cycle was over. Is it reasonable to think the macroeconomy is forcing another cycle? It's hard to know whether the 4-year cycle thing, all that's got to do with the Bitcoin halving. The whole 4-year cycle thesis is that the Bitcoin halving is what causes the 4-year crypto cycles. So I don't play by those rules, right? Basically, I play by the rules that we're creating technology that has real use cases, real long-term value proposition that major cryptos, especially like Ethereum, which is my largest position, very open about that on the channel, has a huge potential to change how we use the internet of value, right? And there's so much you can do with Ether that I'm really bullish on that in the long term. Like you could say so many reasons why, right? The fact that you need Ether for staking, the fact that you need to pay the gas fees, you can use it in DeFi. You could talk about network effects, you could talk about Metcalfe's law, you could talk about active users, all this type of stuff, right? But my general bet is that that's going to trend higher over time. It's going to have higher highs and lower lows. You could sit here and draw all these different speculations based on past data about how you could try to forecast it, right? It's a forecast. Nobody knows the future by any stretch of the imagination. Everybody tries to say, well, it's got to go this many multiples past the prior cycle's all-time high. Well, everybody thought that was wrong, right? There's a big world with chaotic factors that can change the behavior of markets besides like this superstitious 4-year cycle, right? So, but my bet is that it's going to go up, right? That's my bet. And I think it's going to go up a lot higher, a lot faster than a lot of other stuff that I could potentially back. You just don't know how long that's going to take. Somebody says I recently joined a group of freelance Solidity Dapp devs and already made some ETH working on smart contracts. Awesome. Good work. Yeah, some real value behind Web3 and blockchain. Yep, totally. And you take on rollups. Yeah, so I think rollups are definitely going to be a big factor in ETH scaling long term. So, everybody's biggest complaint about Ethereum is too slow, it's too expensive to use. We don't have to wait for Ethereum 2.0 to fully arrive in order to fix that problem. That's what layer 2 scaling solutions are for. Optimistic rollups, ZK rollups are, prime examples of this. So where you create a second environment and you batch up the transactions and they get included back on the chain, they get rolled up. That's the whole idea. The rollups are definitely the future of Ethereum per, like Vitalik's viewpoint. It's hard to argue with that, right? Rollups versus L2s. Rollups are L2s. Somebody says BTC will reach 1 million by 2030. It could. Somebody says, what's your opinion on those who can only invest $200 in Bitcoin and $200 in ETH? Is it a waste of money because it's not enough money, or keep buying Bit? I would say this, like, you know, I'm not gonna give you investment advice about what you should buy, but I'll say this as a general rule, like if you don't have a lot of money to invest, the best strategy is to fix the amount of money that you have to invest, which basically means increasing your income. And the best way to do that, if you're interested in crypto, is to break into the industry and actually work in blockchain. And the fastest way for most people to reskill and get into the crypto space is to become a blockchain developer. Okay, it's one of the highest paying fields in tech. You know, so that's the end of the day. That's what I want to help you do on this channel. Okay, there's huge shortage for tech talent in the space. Even while crypto's in a bear market, there's still lots and lots of people who are trying to hire blockchain developers. So if you don't have a lot to invest, that's the best way to increase the amount that you can. So you can definitely check out my YouTube homepage. You can find those video courses. They're like Udemy courses, but totally free. We just put out a new one actually on Friday, a new Solidity tutorial for Solidity version 0.8. Okay, definitely go check that out if you haven't already. Okay, I'll plug that here. So I just added it. I've got this free blockchain development courses playlist on my YouTube homepage. That's what I'm talking about. So if you go there, you find the ultimate Solidity tutorial. That's the updated version for 0.8. We'll go through the fundamentals of Solidity programming language. Somebody says, do I think Coinbase survives this bear market? Yeah, I'm not worried about Coinbase going away. Definitely not worried about Coinbase going away. Yeah, also, I mean, that's a pretty large candle on ETH. Let's actually look at the candle on Bitcoin. So yeah, we have huge selling volume on Bitcoin. It feels like a capitulation. I'm not saying it's the final capitulation. I'm not saying it's the bottom, but there's lots of signs that feel like at least a temporary bottom. Crypt Technology says he works in blockchain and earn Bitcoin every month, helping to run NFT social media chat room. Just awesome. All right, everybody. So that's all I got for today. Like I was saying before, you know, becoming a blockchain developer is definitely the best way to take advantage of this industry. This is the best way to make long-term, you know, life-changing wealth. I've actually got a big announcement about that coming up later today on my YouTube channel. Make sure you subscribe, turn on notifications. I got an important video you don't want to miss this afternoon. So, but if you want to do that, you definitely go to my YouTube homepage. You can find those free tutorials there. They're like Udemy courses, but they're totally free. I was just showing that on my screen here. All right, if you like those videos, you know, or you want the next step, or hey, maybe you'll take a master shortcut entirely, actually I've become a blockchain master step-by-step start to finish over at dappuniversity.com/bootcamp. You know, you don't have to be an expert to get started today. Help people with zero coding experience become real-world blockchain developers in a matter of months. So that's all I've got. Until next time.